FinBlue, the FinTech Center of Excellence at the Software Technology Parks of India, Chennai, is set up under the aegis of MITI, Ministry of Electronics and Information Technology, Government of India. We take pleasure in inviting Padmaja from Indian Angel Network, Jaijit from Zerone Microsystems, and Prem Kumar from UK, the Managing Director of Pontaq Cross-Border Innovation Fund, to this FinTeract conference on venture capital, opportunities, challenges, and the road ahead. Thank you again, Padmaja, Jaijit, and Prem. It is our pleasure to have you on board. And I'll start with the first question to Padmaja. Padmaja, could you briefly explain the difference between Indian Angel Network and IAN Fund? What is the criteria used to decide to invest from an angel network vis-a-vis the fund itself?
Thank you, Mahesh, and thank you for inviting me to this panel discussion. I am truly very happy to be with my co-panelists. IAN, as you know, is the first angel group in the country. We have about 500 angel investors who are investing very actively. Last year, they did over 45 deals. So this is a very active platform. As we've gone through 15, 16 years of life as IAN, one of the key things we started to look at, and we did some data analytics around that to see where we have performed. One of the key things that emerged is while we have done a good IRR of mid-30s and with a low failure rate, but we could improve our portfolio performance by bringing early stage next round funding. And that's when we decided to launch the IAN fund. So now between the IAN investors and the fund, we have probably the single largest platform for seed and early stage investing for entrepreneurs to raise from 25 lakhs to 50 crores along with our co-investors. And we're sitting almost in the center of the ecosystem. So we do have a lot of marquee investors, VCs, strategics, overseas investing with us. To your second question, Mahesh, the way we pick up a deal at an angel level, an opportunity at an angel level or a fund is very, very simple and perhaps stupid, but it works very, very well. Companies which are raising up to 6 crores, we have the angels lead it, and the fund comes in with 20%, which is very good for very early angel deals because they have an institutional investor already sitting there who will quickly move it to the next level. If the deal is more than 6 crores, then of course we take it with the fund. And if it's any of our portfolio companies before or after the fund was launched, we pick it up at the fund and take it forward. So together what we are doing is exactly the thesis that we had put out, that early stage, there are two critical pieces for any early stage venture. One is fund and the other is talent. Mm-hmm. We believe and we bet on the founders. So the talent is brought in by the companies and we are trying to bring in the funds.
Absolutely. Absolutely. That's great. And thank you very much for that insight. May I now actually request Prem. Prem, as a cross-border innovation fund, what difference do you see in investing in fintech companies overseas and in India? As many of these fintechs see global opportunities, how do you help them as a cross-border innovation fund?
So yeah, thank you, Mahesh, and thanks to Padmaja and Jaijit as well, and glad to be part of this panel. To your first question, Mahesh, in terms of the cross-border and what differences do we see on the fintech ecosystem, I think it's a value chain and a valuation quest. Right? From a value chain perspective, what we have seen, and it's continuing to kind of slimmer down, is that in India, in the fintech space, you have more companies coming in the payments and finance space, even though that is kind of reducing, and as such, you have the entire value chain being addressed. For example, you're talking about, for example, in the Western world, one would also see payments and finance, but would also see other elements like technologies in charity sector for contactless payments, or capital markets kind of companies, which one necessarily doesn't see in India emerging as quickly as the Western world is coming through. But part of this is also driven by the use cases required required of a developing nation was that of a developed nation, and also the volume versus the value economy, and notwithstanding the regulatory support that one would see. For example, India, you wouldn't see as many crypto companies, whereas in the Western world, one would see that. So that is on the value chain perspective. But if you also whittle it down into the sectors as well within FinTech or subsectors within FinTech, you also have InsurTech and RegTech. But yes, India is catching up on the InsurTech sector, but not at the pace at which the Western world is. Primarily driven by the penetration of insurance within India. RegTech, again, I think we are yet to catch up on a longer space there. So that's on the UK and Indian comparison on the value chain perspective. Valuation perspective, I think India is a much better value for money, as any investor would say, because the Western world is extremely costly. On a like-for-like basis, we think at least the Western world is at least twice. In terms of the cross-border and expansion, we help them with capital, markets, and clients. Capital in terms of investments and co-investments from investors from the Western world, which is FDI into India. Markets in terms of helping them set up in the UK through various opportunities available and grants, and clients through our network of mentors and venture partners.
Wonderful. Thank you very much, Prem, and thank you for joining today from UK. I think I have a very interesting question, and I'll come back to you. In the meantime, I would like to actually hear from a very successful FinTech entrepreneur, Jaijit. Jaijit, Bharat ZPOS aims to replace physical hardware-based point of sale with a soft POS, essentially a smartphone. When such a disruptive idea is presented to investors, what kind of feedback did you receive?
Mahesh, first let me thank you for inviting me to this panel and also being an investor in my company, along with IN of Padmaja, that's led by Padmaja. We are very thankful for that. The job of a VC, essentially, if I understand it correctly, is to be able to invest in high-risk ventures, which is why you have a separate category of investors. With that mandate, it is important for the VCs to first figure out what are the risks involved. And therefore, the feedback we got was essentially around risk. The usual feedback that I would get is, if this is so disruptive, why hasn't somebody else done it? And if it can become so successful, what about the existing players? Why can't they replicate it? If they have lots of money and people in, so they can go ahead and replicate it. So why your intervention is needed? And related to that, the other questions would be that typically venture capitalists would have invested in entities which will end up disrupting. So it becomes a bit of a conflict of interest that there is already an investment in certain fintech companies, which a new entity is coming in saying, well, we propose to disrupt those. And that becomes quite conflicting. And those are the complex questions and ecosystem questions that come up. Also, the next set of questions that come up is, well, if it's disruptive, what will be the operational model? Because we have come out with a technology model, and we have a view that that technology model is going to lead to a new business model. But how will you really touch the dots? How will you put the dots together? How will you put up an operational model which will really take you from the technology to the business? And what about the regulatory models? Are you really going to be within the existing regulatory framework, or are you going to bust some of the regulatory envelopes that are there? Will you be crossing the line? Will you be in the gray area? And frankly, all of those questions are very pertinent. At the end of the day, it's a fitment from the VC's perspective, given the environment and the set of entities that they're working with, and their ability to see whether this technology and the disruption will actually work or not work. Because frankly, Mahesh, there are many disruptions that actually don't end up working. Mm-hmm. Right? And then there are disruptions which are in your face and there are competitors who don't get into the market. I mean, I think a great example is the Tesla electric vehicle. Everybody knew that electric vehicles is going to happen, but the entrenched players did not get into it. It was Tesla which got into it in a big way.
Right.
And I think that's the kind of questioning that really happens when you come up with something disruptive. And as Padmaja actually said, it depends on the ability to also execute, right? And that faith has to be there.
Absolutely. It's a great insight, Jaijit. I have a follow-on question on this. This might be very useful for the aspiring and FinTech startups who are actually listening to this. So Zerone is a FinTech funded by marquee investors, multiple angel investment networks like the Chennai Angels, IAN, and IAN Fund as well. And you also have a great team and advisory board. I'm sure a lot of hard work has gone behind this. What was the magic, if I may ask, you had to make this happen? What could FinTech startups learn from you, follow your footsteps?
I think from a team perspective and the advisory board, I was fortunate to have been working, for quite some time before I started off. And so I had, worked deeply with most of my advisory board members, in fact, all of them. And that helped in them just, sharing the same vision that I brought in. But along with it, I think one of the key points is to make sure that one has an idea that is scalable. Nobody would like to be associated with ideas which have very limited impact, not just from a financial perspective or returns perspective, but having a contribution to a masterpiece being created in that sense as a legacy. And so unless there is a large impact that we are moving forward to, it would not interest too many people. And therefore, having a scalability of whatever idea one brings in is extremely important. The second is the ability to bring in focus. Mahesh, I might be saying this, and everybody would have heard it, so there's nothing new that I'm talking about. These are things people know. But when you go through the process, it's a different kind of learning that you get. There are many learnings that you have when you are a child. But as when you grow up, you start appreciating those learnings. And therefore, I'll be saying the obvious, but when it comes at the right moment, it helps. So bringing in focus, and it's very easy to get distracted because mind is a very distracting thing. And venture capitalism is about the ideas and the mind. It's very easy to get distracted and say, I'll build 20 different things. Our core technology is applicable across multiple segments, be it FinTech, be it RegTech, be it food. We have applications in multiple areas. But if we let the mind go astray and start thinking about too many things, that becomes very unconvincing in that sense. And it's also detrimental to whatever venture that you're looking at. And third is the ability to execute. It is important for the stakeholders to see that they are in a venture where there is an execution that is going to happen rather than intellectual venture capitalism. It has to be something on the ground, something tangible, and there is need to put in the horsepower behind to take baby steps and get them executed on a daily basis. And that's what the team, the stakeholders, advisory board, the venture capitalists, everybody wants to look forward to that. Look at it from the employee perspective. Why are they joining a high-risk startup? They can get a cushy job in a large company. So it's our duty to also make sure that they get the excitement for which they join a startup, that they get to see and make the impact that they have, they're looking forward to. And that's why they were motivated to join a startup. So those are the three key points, Mahesh, that I would like to share, which is one, getting the scalability in, second, getting the focus, and third, the ability to execute.
Fantastic. Very, very pragmatic and coming from a horse's mouth, so to speak. Thank you so much, Jaijit, for that. And let me now focus my question to the investors. Prem, you have a license to operate in US, UK, and India. And what is your word of advice to aspiring entrepreneurs who are seeking to raise funds in general and FinTech startups in particular? I would like actually Padmaja to also give some perspective on this, followed by Prem first.
I think the answer to this question could have been slightly different before COVID, but now it's different, I think. See, what the pandemic has taught us is we are living in a new norm where it's all about digitally global and globally neutral. When I say digitally global, we were literally talking about before this chat. We were chatting on the side along with myself and Jaijit, which is how his own solution could be applied to the Western world as well, which is exactly what we were trying to. So basically, all the customers that they are catering to, they're just on a natural neutral platform. So that's number one. On the other side, on the consumer side, consumers are becoming neutral in terms of the products and services who they want to procure from, because the consumers are from the globe, which means they don't really care who the provider is. So we're living in a digitally global and a globally neutral world, right? So as such, what founders and entrepreneurs need to think about is how are they going to offer their products and services catering to this new world where scalability digitally is not a big problem, which has quite very well been evidenced by the pandemic. So that's number one. Number two is profitability as opposed to valuation, right? What we anticipate is going forward in the next 6 months to 12 months and 24, there'll be a heavy focus on profitability of our portfolio companies and outside as well. And I think we will have a very keen focus on the timeline by which our potential investee companies, our existing in portfolio, will also become profitable. So I think founders should be considering options or having a very keen eye to make their companies profitable. And the third thing is for early stage companies, irrespective of where they are from, our recommendation will be do their homework on the legal structuring of a particular investment. It's very important because understanding the legal process will allow them to quickly understand and appreciate where investors are coming from and why they are coming from. And that allows for a quicker closure of the overall deal and getting the business forward.
Wonderful. Thank you. Padmaja, what's your perspective?
I actually just wanted to step back, Mahesh, is to add to what Jaijit said. Very clearly, to build a business, there are two major resources required. Number one is talent, and number two is funds. It is the entrepreneurs who bring in that talent, if I may say so, kick-ass talent. They know their domain, they understand the space, they focus on building it up. Investors bring in the funds, and that is what is a complementary partnership between an investor and an entrepreneur, and together they can clearly build value. Number 2 point, which I think Jaijit went into some detail, I really want to say what investors look for. They look for a class A team, even if it has a class B idea. A class A idea with a class B team does not work. The reason for this is the bet investors make are on those 2 or 3 co-founders. And therefore, to borrow from Vidya Balan, I would say that entrepreneurs need to focus on execution, execution, execution. There is nothing more important than that to build a company. So I just wanted to add to that. The question that you asked of me, Mahesh, is what advice do I give to aspiring entrepreneurs? I think, folks, first of all, if you are aspiring to be an entrepreneur, it's a great thing, okay? But what is important for you to understand that the career path that you've chosen to build a startup or to get going on a venture is the highest risk and the most difficult. So number 1 point I would like to advise entrepreneurs, please be absolutely clear in your minds that this is what you want to do. It is an all-consuming career path that you have chosen. You have chosen the most difficult, the most risky, the most all-consuming. You will be absolutely have to be self-motivated. You will have to understand that you will have no life. Honestly. I mean, I don't think anybody says this, but I am to say that work-life balance almost write it off. Okay, so that's number one. Number two, you will face crisis. You will face hurdles. You will face problems. And it is only you and your motivation that not only keeps you going, but many times you will need to keep your co-founders going, your team going, you'll have to handle your customers, your vendors on high TRPs all the time. Okay, you have to be really a sales leader, because you will have to in some ways sell to your co-founder. You'll have to tell him it's okay, let's pick ourselves up and get going. You will have to obviously sell to customers that, you know, yes, we don't have a track record, but we are the best thing after God's after God to solve your solution. You will have to speak to your team, and you know, when you recruit, to say, yes, of course I can't pay you what you expect or what are your market salaries, but listen, you're going to be joining what is going to be $1 billion company. So I can pay you a little bit of cash, but I can give you shares, and those shares will convert into a very valuable package for you. So you are selling to him, you're selling a promise, you're selling you're selling, right? Third is you will also be selling to your suppliers, right? To say, please give me whatever I need, but you know, I know you get 30 days credit, but you know, I'm going to please give me 60 days credit, because we're building a long-term relationship and you are partnering with $1 billion company. So, you know, you're selling. Believe me, folks, believe me, even in my life, I do this and I'm sharing it. You're selling to your spouse, you're selling to your children, you're selling to your family. You know, you are selling to say that, listen, why don't you get going? I will to the movies. I'll come. I'll just do one meeting and come. I'll just swing by the office and come. I'm doing this for you. So you're selling all the time. So only if you are ready to sell 24/7, 365 days for the next 5 years, do not become an aspiring entrepreneur. I would put it like that. Number two is the question that Mahesh asked, is what would you look for in a FinTech space? See, very clearly what works is not to emulate. Startups which are just getting going, if you do a copy of another big company, it's not going to work. You don't have the ability, you don't have the reach, you don't have the cash resources, etc. So you have to, by definition, look for some innovation. By definition, you have to look for some disruptive model or disruptive solution, and yet solve the problem that you're trying to solve. So innovation, number one, is very critical. Luckily, in the FinTech space, there are so many, you know, the growth and the swivels are happening so fast that the number of opportunities that are emerging are humongous. We have started with Paytm, we have started with Paytech, we have started with large loan giving companies. That's why we have quote unquote these loan apps. We have looked at crypto, all of these. But honestly, there are many more that have opened up. If you look at insurance tech, you know, companies like Artivatic. If you look at focused insurance, like we have done in a company in the US, which is focused on insuring against tornadoes in Florida, for example, which is a very tornado hit part of the world, part of the country. If you look at regulatory tech, it's opening up. There are lots of companies. Also, there's a huge opportunity that if you come up with a tech innovation, the large companies, there's an acquisition play. So, you know, try and pick the gaps and build a company there. If you look at wealth tech, if you look at escrows, if you look at foreign exchange, all of these are disruptive. And more importantly, these are in some ways silos, right? I think what is important to understand that there are horizontals that have emerged. If you look at demonetization, there was a push to go digital. But with last year's COVID and pandemic, etc., there is a pull to go digital. And this means that the market size has suddenly expanded. when all of us in tier 1, tier 2, tier 3 were going digital, tier 4 and tier 5 were lagging behind. But with the lockdown and all the problems that it created, it has opened up a new market. It has opened up new opportunities. So there is very, very clearly an opportunity for many of you to cater to that market, be it with simple models of MFI, which you disrupt, or also how do you cater to different languages, different cultures, different vernacular. I mean, if you look at a company that we've invested in, vernacular, they're actually catering to bringing in the Bharat users onto the team. So I think there is a huge opportunity there. But what I would also want to bring to your notice is that, India is emerging into an M&A space. So if you create propositions, look for a gap in the value chain of large companies and say, here is a gap, let me build a proposition here, let me prove it, let me monetize it, let me make sure it integrates with the larger ecosystem. You could create some very, very interesting tech, which will then give you an acquisition play. In fact, Israel does that. Israel looks at Microsoft, for example, and says, this is their product suite and this is the gap and I'm going to innovate for that. And then they are so sharply focused on that gap and building for that space, they just get acquired. So I think that thinking is also very important as you build your ventures in the fintech space, which is not only growing, but I would say vertically, but also horizontally. So I think that's the new piece.
So Prem, you have actually been watching the global investment trend across the world. What kind of insights can you share about the trends in the new normal world for the companies that are actually getting investments and more on the fintech side?
Yeah, right. Okay. Right. So from the trends perspective, I mean, Padmaja was earlier alluding to the elements of fintech and how it is unearthed and wealth and advisory and so on and so forth. Particularly for me, we need to balance out the technology innovation with what is happening in the market. One is keen to appreciate the fact that there's been a heavy hit on the mortgage and real estates and so on and so forth. So, and that kind of causing much of stress on the balance sheet and much of stress on the consumer or the commercial estates and so on and so forth. So I personally believe that we will see this in the next couple of years. We'll see a lot more of such companies trying to address such stress testing in the market and how we can address that from a fintech space. At the same time, what has also been positive in the last year is the evolution of crypto as a big opportunity in the segment. I mean, what started as $6,000, I mean, as of yesterday was $33,000, $34,000, and it's much higher as per the futures, is about $75,000 per Bitcoin. So I think we will see an evolution of, subject to the regulatory changes coming in, evolution of payments being made and much more ease out in conjunction with cash and crypto and so on and so forth. That blend will come in, and I think this will also percolate into other forms of payments as well, which is lending and personal finance and so on and so forth, wherever possible. So that is on that front, and the third element is capital markets. Okay, again, I still cannot fathom as to how the capital markets could perform so well, especially when the whole pandemic was happening and companies were really making well. So I think these are the three key segments that I think the fintech will drive going forward. I mean, this is in addition to the neo-bankings of this world and so on and so forth. But what this pandemic has also taught us is the creation of a lot more wealthier people from across the world. So that means, and especially in a normalized world and the world being flat, as you will, like a map, people are looking to kind of allocate their wealth across multiple asset classes. So wealth management also becomes a big key thing, but with a multi-geographical focus and multi-asset strategy. I think those are the key elements that I think are the trends of the future of fintech.
Interesting, and thanks for that. If I may ask you, Jaijit, what trends do you see in fintech startups in the post-COVID new normal world, as they say?
I think the the two dimensions that I see that there is a development happening is one in the direction of processes.
Mm-hmm.
So the fintech world is being broken up into smaller and smaller processes, and those are getting automated. It kind of reminds me of the time when BPO was a big thing and all processes were being broken down and outsourced. Now that outsource is being taken to a technology instead of a person. And I think that's where one big area of fintech development is happening. And as Padmaja was referring a little while ago, it's happening in the area of escrow, in the area of neobanking,
Mm-hmm.
and so on and so forth, in a plethora of areas, including even things like trusteeship.
Mm-hmm.
Instead of having a human trustee, can we have an automated third-party trustee doing the job? And that's actually happening as we speak. The second dimension is in the dimension of technology, where one of the key things that we obviously see is an increasing adoption of the NFC ecosystem. The second is cryptography, specifically the part that Prem was mentioning about cryptocurrencies, but not just in currencies. It's in everything. It's in stocks, it's in agreements, and so on and so forth. Crypto and blockchain go hand in hand, so I'll not repeat that. But clearly, there is a lot of development happening in that direction. And then there is development happening in terms of a non-repeatable third-party local language support for finance. That may not be happening in the Western world because that's very much homogenized. But in places like India, Indonesia, Africa, and so on, there is a need for a local language support for financial transactions, both in terms of voice, chat, and agreements being in those areas. And I see a lot of my startup colleagues getting into that area. So essentially, Mahesh, there is two directions. There's in terms of process. There's a lot of innovations happening, and startups are going in that direction. And second is in terms of technology. The other interesting point that I see is where startups are mashing up multiple technologies and creating something which is much more powerful than each of those individual ones. I think that's going to be the next big trend. And those mashed up technologies are going to solve far more complex problems than what those individual technologies were solving.
Padmaja, if I may ask, what trends do you see in the funding in the new normal world in general and fintechs in particular?
Look, I think funding good businesses built on solid foundations will attract money. Let me give you one other perspective. The fact is, the business of investors is to invest and get returns. They are not going to close down their business, correct? So you will be able to get money. But I think what is required is companies with a solid foundation, which means that they have a growing top line and a focus on bottom line. We completely, as investors, understand that you will not have a profitable startup. I mean, it's not possible. We understand that. But do you have a path to profitability? Do you have a focus on profitability? Do you have a focus on EBITDA? Which means that do you have unit economics? Do you look at ARPU economics? Are you looking at the way your customer acquisition costs? Are you looking at your spend? What is your capital efficiency? All of those build a strong foundation. But I think the cement to the foundation, again, is the entrepreneur. It is the entrepreneur who actually builds a cement, right? And makes sure that irrespective of anything, I will go and build this business. I'm determined. Whether anybody invests or not, maybe the growth is slower, but I will. Persistence and determination is what is the cementing factor. And if you are building a business with those factors in mind, with that determination, with that focus on building a strong foundation team, believe me, you will not need to go fundraising. Investors will chase you. And I think for an entrepreneur, that's the best space to be in. And finally, I think what is very important, funding is not the be all and end all of life. Please It is, if you get funds, if you're able to raise funds, excellent, no doubt. Okay. But what is even par excellence is that you build a company on your own revenues. Prove your point, prove your product, prove that the customer is buying, build as much as you can. The best way of funding a company is through revenues. Okay, so please keep that in mind. Build solid companies. Funds will not be an issue if you are focused on building a sustainable, scalable, and a solid company. So, friends, please look for the gap. Build an innovative, differentiated model which allows customers to do something different or differently. Please focus on execution, and then build a company with determination that you're going to build a solid company with a top line and a bottom line, which allows it to become a valuation based? No, valuable company. And I think that's important. So on that point, Mahesh, I will stop and thank you very much.
Wonderful. That's fantastic to know. Thank you once again, Padmaja, Jaijit, Prem, for sharing your insight. I get a positive vibe that funds will be available for fintechs with the right business model enabled by technology, supported by regulatory framework that could fundamentally disrupt the way business are being carried out. Again, on behalf of FinBlue, FinTech Center of Excellence, and TAI, I thank you for your participation, and we look forward to having another session in the future soon. Thank you.
Thanks, Mahesh. Thanks, Jaijit. Thanks, Vidya.
Thank you, Prem. Thank you, Padmaja. Thanks, Mahesh.